Welcome back. Today, we're diving into a detailed analysis of ONDS Holdings, ticker ONDS.
The one that just had that massive 700% gain?
That's the one. Now, the underlying report is strong. The financial data is compelling, but we think a few tweaks to the structure could really maximize its impact. So let's get straight into it.
Absolutely.
So right out of the gate, the report hits you with this very high-energy, bullish, informative tone.
Yeah, you see phrases like 700% gains, and it talks about ONDS going from survival mode to domination mode.
And I get it. You want to grab the reader immediately.
Of course, but we have to think about the audience for this kind of in-depth report.
And while that energy is infectious, the report's tone might actually be diminishing the impact of the really strong financial data underneath.
I think that's the crux of it, the immediate reliance on hyperbole. Calling them the new king of autonomous drone tech.
Or saying the logo slams onto screen.
Exactly. A sophisticated investor reads that, and they might immediately suspect it's more of a pump piece than a serious analysis.
And that's a shame because it makes the truly solid figures, the $400 million cash balance, that incredible 582% revenue growth, it makes them feel secondary.
Almost like they're just there to justify an excitement that was already decided upon.
The writer's done the hard work, but the sequence sort of undermines it.
Precisely. The goal isn't to kill the excitement, it's to earn it.
So the suggestion is to resequence the communication flow. Let the substance establish credibility before deploying that enthusiasm.
Let the facts create the hype.
That's a powerful shift. It changes the narrative from believe us because we're excited to
we're excited because this data is undeniable. You move from just pitching a stock to presenting a conclusion.
So concretely, instead of leading with that 700% gain,
start with the numbers. Lead with the $10.1 million in Q3 revenue, that 582% increase. Build that foundation of credibility first.
And then you can bring in language like domination mode as the justified conclusion to that performance.
Right. The reader then thinks, okay, I see why they're so excited. It feels earned.
And you can save that 700% gain as a payoff. Use it to show how the market reacted once it saw the operational success with their Optimist and Iron Drone systems.
Now you've framed the market action as a fundamental response, not just retail hype.
And that small change in structure transforms it from an emotional pitch into an authoritative analysis.
Which is exactly what unlocks institutional attention.
Okay, let's move on. Let's talk about the risk assessment, the bull versus bear case section.
The bull case is really well done. Comprehensive, supported by analyst targets, the growing backlog, it's all there.
But building on that need for credibility, the bear case, well, it needs to be stronger.
To ensure this report is robust and logical, the counter-arguments really need to be expanded and integrated directly with the company's specific growth mechanisms.
As it stands, it's a little too general, right? It mentions things like still posting a net loss or spending money to grow.
Points that frankly apply to nearly every high-growth tech company out there. They don't specifically engage with the ONDS story.
They don't challenge the core strengths cited in the bull case, like those huge defense and rail contracts.
Exactly. A generic bear case suggests surface-level work. The real vulnerability here isn't just spending money, it's about how that spending might impact margins as they scale.
So we're at risk of overlooking the specific execution risks tied to their Optimist and Iron Drone deployments?
We need to connect that generic spending money point to a specific question.
Like about contract execution or margin pressures? Ground the risk in their actual business.
So instead of just saying net loss, we need to explore the nature of that loss. Is it a strategic investment in R&D, which is healthy?
Or is it an operational loss because scaling up production to meet that backlog is proving more expensive than planned? The latter is a much bigger red flag.
That distinction is absolutely critical. An institutional reader sees net loss and just shrugs.
But if the analysis poses a risk like, cost of goods sold is accelerating faster than revenue because scaling Iron Drone is proving difficult.
Now that's a focused, actionable risk. It shows you've really dug in.
So a concrete example might be to pose a question.
Something like, is the current gross profit climb sustainable if the cost of deploying these large-scale systems accelerates faster than anticipated, potentially challenging that path to $110 million in revenue by 2026?
Posing a question like that shows a mastery of the topic.
It validates the entire bullish thesis because it shows you've already considered the most likely ways it could fail. It just elevates the entire report's credibility.
All right, let's talk about the final point, the structural flow from the financials into the market dynamics.
The report moves from the numbers into the chart analysis, which makes sense.
But the discussion of the technical analysis would benefit so much by explicitly linking the chart action back to the fundamental catalysts we talked about earlier.
I noticed that too. They're sort of treated as two separate things right now.
Yeah, the weakness is that the chart analysis section, the breakout above $9, the volume, the bear trap, it's all treated as a purely technical event.
It feels detached from the execution milestones. The report correctly calls the 700% gain a repricing.
Right, which implies a fundamental shift.
But then the technical section doesn't fully explain why institutions are loading the boat right now based on that shift. It's like, the financials are great, and hey, the chart also happens to be great.
There's no cause and effect?
So the suggestion is to integrate them. Frame the technical breakout as the market finally validating that pivot from survival mode to domination mode.
Use the financial data, that Q3 revenue beat, as the reason for the technical momentum.
Think about it this way. A chart technician sees the $9 resistance cleared. A fund manager needs to know what fundamental shift gave institutions the confidence to smash through it.
We need to bridge those two views.
So let's get specific. Revisit that section on the $9 resistance.
Instead of just stating its technical significance, you frame the clearing of $9 as a direct market reaction to that $400 million Fortress balance sheet.
Exactly. That cash position, confirmed in Q3, is what fundamentally de-risks the company's ability to execute on its backlog.
By tying the technical move to that de-risking event, you show the market is acting logically.
And the volume pouring in is no longer just big volume. It's institutional money confirming the story.
Precisely. It shows the chart action isn't just psychology, it's the market actively pricing in the growth story.
And then the idea of the psychological road to $10 and $12 being open isn't just a pattern on a chart.
It's a reflection of the market confidently pricing in that $110 million revenue target for 2026 because Q3 proved they're on track.
And that integration makes the entire analysis predictive, persuasive, and just so much more compelling.
So we've covered some really crucial areas here. The underlying data in this ONDS report is fantastic. And with these high-level revisions, it's going to be so much more powerful.
To summarize the key suggestions, first, resequence the communication. Let the substance, that 582% growth, the $400 million in cash, establish credibility first.
Then let the high-energy language serve as the justified conclusion.
Second, deepen that bear case. Move past the generic risks and connect the net loss directly to the specific operational challenges of scaling Optimist and Iron Drone.
Make the risks specific to ONDS.
And finally, don't leave the technical analysis on an island. Explicitly bridge the chart events like that $9 breakout to the fundamental catalysts.
Show that the market action is just validating the company's pivot to domination mode.
Implement these revisions, and you'll have a more balanced, credible, and ultimately more persuasive analysis.